many Bangladeshi high net worth individuals and families are actually buying assets in Turkey, which is formerly known as Turkey these days. You are an expert when it comes to Turkish investments. And we will talk about your Turkey-based investment firm, Talis Capital, in a moment. But why don't you tell our audience about how you're thinking and dealing with the macroeconomic conditions, including the currency volatility, the political regime, and does macro play any role in your investment decision?
It's a really good question, Ryan. Let me answer it completely this way. We have two funds. We have Peterson Capital Management and we have Talis, and both of them require a slightly different skill set and a different approach. So with Peterson Capital Management, we can take this perspective where we're analyzing 13 Fs. We're looking very bottom up at businesses, same as Talis, but we're looking very bottom up at businesses. And in many cases, it is important to almost ignore the macro trends because the macro is so unpredictable. It doesn't give us much of an edge. And we get more of an edge focusing on an individual business, that business model, whether or not the margins will grow, the cash flows will grow, if it's going to be managed appropriately. And that's where we can identify an exceptional opportunity. Now, in the US and for the Peterson Fund, we might have 10,000 securities available to us. So we need a 13F type solution to narrow down something, or we will just be in analysis paralysis. We can never understand every possible opportunity. Talis in Turkey is quite different, and it would be different in Bangladesh and a few other. Turkey only has maybe 400 public securities. And of those, about 200 are of no interest. And so you can actually analyze the entire market. And if Mesut Eliotolu has been doing exactly that for decades. And so it becomes, when you're in a developing and emerging market, you can actually just grasp and try to understand the entire marketplace. And it's just not possible in the US or a global world. So because of that, and also because of the nature of developing markets, we need to take the macro into a little bit more consideration because it can move the markets up and down by extreme measures. So we are still focused on bottom-up company-specific analysis, but we also need to be aware of what's happening in the marketplace. So let me give you an example of that. The current political environment is complex. When we're over in Turkey, right now I'm not in Turkey, but even we are constantly meeting with the management of these firms. People are very reluctant to speak openly about their views, but there's this idea that the current administration is following some very unorthodox economic policies. And what do I mean by that? I mean like rampant inflation, and then they lower interest rates, which everyone knows from Econ 101 would cause more inflation. So we all question these moves, and it creates volatility, unnecessary volatility, and a lot of uncertainty in the Turkish markets. What that does for a firm like Talis is create these strange opportunities where a really outstanding global firm might be traded on the Borsa exchange in Istanbul. And because of that, they'll see the price fall with everything else, but they might be earning dollars or euros or selling a commodity type product that's priced globally in, say, dollars or euros. Meanwhile, their expenses might be falling because they're operating in Turkey. So these things can actually help us moving into the positions, which is why we're sort of hyper aware of this. Let me touch on it and give you a conclusion to that statement, though. The current unorthodox economic policy in Turkey, we expect will end. There's an election coming up in March, and the situation is as follows. Currently, whether or not they win or lose, everyone knows the economic policies have failed. Even the current administration, they just cannot admit that right now, or they will lock in their loss at the next election. So over the next, it's a very interesting time in Turkey because these elections are coming up. And we know that a new administration would change to more orthodox economic policy, and even the current administration would turn to more orthodox economic policy. So we expect the economic direction of Turkey to be improving greatly over the next, let's say, 1 year period of time. But because of the recent past, 5-6 years, the prices are extraordinarily low because people are so uncomfortable with the unorthodox policy. So we've seen, and let me interrupt me if I'm going on too long, but I'll talk to macro one more moment.
Continue.
In Turkey, when we launched the firm, Thales, in 2017, I believe that Lira to dollar was maybe 3 or 4 to 1. Today, it's approaching 18 to 1. Okay, so we have seen a massive decline in the Lira, and we are in this fund. We analyze everything on a dollar-based term, so that it's clear to all of our partners, all of the limited partners within the fund, that we are not just basing our returns on a Lira-based return, which is sort of hard to understand what that means in your local currency. So we do everything on a dollar-based return. So the Turkish market has gone through, in these sort of 5 years, currency crisis, major political crisis. We've gone through, this pandemic, and each of these things have caused massive collapses in the market. And this current Turkish stock market in dollar terms is over 50% off where it was when we launched. So it's more than 50% decline in the Turkish market since we launched. Our fund is flat, so in dollar terms, which is not impressive in absolute terms. I mean, we haven't made a whole lot of money right now, but this has not been trading. This has been ownership of great businesses and leaving them alone. And in fact, these businesses recently have started instituting major buyback policies with their cash flow. So they're buying back a lot of stock at the moment, and that's very attractive to us. So we began with them mispriced, and right now the situation is just extraordinary, where the Turkish market is just throwing up these deals, where one company that I'll mention, and by the way, I should also point out, all of these details are available at thalescapital.com. Masoud and I have been writing letters for these 5 years. There's maybe 20 letters up there. And they talk about the different investments that we've made. In many situations, you need a Turkish tax ID, but if you buy these individually. But we are pretty transparent about how this portfolio makeup looks. And there are companies like Şişecam. We've been meeting with management for years, and they're a global glass manufacturer. They're one of the top glass manufacturers in the world, top 10 glass manufacturers in the world. And they have these sort of soda ash composites, even as far away as Wyoming in America. They're selling, they have 4 different sort of sectors of glass that they operate in, from glass paneling to sort of more practical, like bottling type materials. And they're trading for 5-6 times earnings, and they're selling all of this material in like dollars and euros all over the world. And their costs are based in Lira, and they're buying back a massive amount of stock, and their earnings are growing at double-digit rates. Their business is a very sustainable, high-quality business. Management is very well educated. They're making very shrewd steps. In fact, it's a big deal to be buying back shares in places like Turkey. For a lot of the past, there's a resistance to share buybacks. So this is the firms are now starting to buy back, things like Coach Holdings doing big buybacks, Gem doing big buybacks. These kind of companies become very attractive to us. And so, your followers can go and look up some of these firms, and they can read through the letters and see that there are just these extraordinary opportunities where globally maybe it would trade for 18 or 20 times earnings, but because it's on the Borsa exchange, it's trading for 6. Earnings grow, they're buying back stock. Companies like this can triple very, very quickly. I think you're familiar with how quickly in a developing market, how quickly these swings can happen. So what can happen is an early election's called, and suddenly that happens very quickly. The outcome the outcome will not impact the thesis. The thesis is that after the election, orthodox economic policy get put into play, and then foreign funds will come quickly back into Turkey, and the markets will rise, and our high-quality businesses will rise much further and faster than the rest of the market. And I think we're well positioned for that right now.
No, makes perfect sense, Matthew. So can I assume that, before this orthodox economic policy, comes into play in Turkey, it's still highly mispriced at this point in time, and so it's a good time for acquisition, right?
It is such a good time. There are a few complications when you go into Turkey, like you need the tax IDs and things like that. We have people that use our funds for this purpose to get around needing things like that. But individuals can go, a family office or whatnot could go and acquire an entire business right now. It is, I think, the least expensive market in the world, perhaps with the, realistically, it's the least expensive market that's investable. You might have some Russian securities now that are very mispriced somewhere, but I don't think it's worth looking at those. But this is, and Masoud has laid out this chart in the letter where he goes through developing countries from like Indonesia across the board into Pakistan, and it's just looking at earnings multiples. And Turkey is the lowest in the world at this moment in time. And it's quite strange because if you look at the high quality businesses we're looking at, it's so clear that these are worth multiples of what they're trading for right now. So we have, these energy companies that are basically supplying, 80% of their capacity, like Orlu Energy, is just servicing the local demand. And then Turkey is still importing external energy. So there's not going to be, they're always going to sell the refined oil in all of the cases each year, and they're priced in they have global prices. It's not priced in Lira or something. And so, but their costs are in Lira. So it becomes quite strange when these are paying like 10% dividends and trading for 6 times earnings. It's a unique situation. We absolutely cannot find that for Peterson Capital in the U.S. markets. We use a little Peterson Capital through Talos, which we built. We do get access to the Turkish markets. So we do have about 5% of Peterson is over in Turkey. But these opportunities do not exist in the developed world. You would not find this level of mispricing. And of course, along with this mispricing, in Turkey, you get more volatility. Okay, so there's a little more uncertainty. But I do think if you're able to stomach those challenges and you're able to understand the underlying businesses, the Turkish opportunities are quite remarkable. Many of the firms can double and triple or more in a short period of time.